All right, welcome back. Invest Info episode 31. Um, I want to talk about meme stocks. Want to talk about high volatility. Want to talk about the fact that the game has officially been changed. A lot's happened recently in the market, fueled by the situation with GameStop, Melvin Capital, a reputable hedge fund. By the way, a hedge fund. I didn't speak on it in previous invest info. Hedge funds are funds that are managed by billionaires. I'm sorry. Yeah, they're a lot of times managed by billionaires. The guy doesn't have to be a billionaire to manage a hedge fund, but um, they're not monitored by the SEC. You know, a mutual fund is, but a hedge fund isn't. And there's been uproar against these hedge funds shorting stocks, pretty much betting large sums of money that a business is going to fail. And this doesn't contribute to anything really. This doesn't help the economy, doesn't help anybody but the hedge fund. And Citadel, um, uh, which is run by his name is Griffin, the owner of the Mets. He's partnered with Melvin. The guy that runs Melvin is a protege of Griffin, Citadel's group. So he's watched by other hedge funds, and they saw that he was shorting GameStop. So other hedge funds got in on it, and they shorted GameStop so much that they shorted it more shares than they have available. Now, what's short selling? Short selling is when you buy a stock, or not really buy it, but you borrow a stock, and you sell that stock to someone else. All right, and your hope is you sell it to them at a high price, maybe $50, and you hope the stock falls to $1. So you could what you sold for 50, you could now buy back for $1, and you profit the difference. Now, what they call Reddit Wall Street betters, which I'm highly skeptical of Wall Street Bet and the Reddit group, because as this thing unfolded, you can see that they could be institutionally controlled as well. Controlled oppositions from both sides. This is just a crazy scenario, but let's try to wrap it up in a nutshell, something easy to be understood. So the Reddit posts garnered attraction, and a lot of people started buying GameStop. Um, Now this is where I say Wall Street Bet is quite questionable. Market makers move prices. These are both multi-billion-dollar moves. Um, if you look at GameStop, it went from being valued at a market cap of 260 million, 230 million in March, all the way up to 12 billion just a few days ago. That can't be done by the retail bros, as they call it. That's actually professionals. Okay, I know that the consensus is these guys are a bunch of retards in their mom's basement, but we don't know that for sure. All right, because as you can see today, all right, these meme stocks eventually were blocked. These stocks that everybody, I mean, people on the street was rushing to get into: GameStop, AMC, Nokia, which Nokia is not even a meme stock. It's actually a value stock, and it's unfair to companies like Nokia where they're like, what the hell did we do to get in this? We didn't, it's just, if you were shorted, if hedge funds were shorting your business, these guys on Reddit were looking to pounce on these shorts and create a squeeze. Because going back to the shorting a stock, you borrow the stock and hope it goes down so you could buy it back low. Now if it goes up, not only do you have to buy it back high, you have to pay what you borrowed. And that causes the price to go up, and the other hedge funds has to cover, and it causes a chain reaction in the price. This is not done by the retail, bro. This is a professionally orchestrated move. Now, there were retail people that did profit from the situation, and hedge funds lost big. And in the world of investing, somebody has to hold the bag. And the hedge funds, certain hedge funds were wiped out. Now, I personally believe these are billionaires wiping out other billionaires and manipulating the news and investors to thinking they had a part in this, which I don't believe they did. And the reason being is, okay, so everybody got into these meme stocks because, on paper it only makes sense. If these shares are shorted heavily, all you have to do is buy, and if the demand is high and the supply is limited, this is going to cause the stock to rise up. Those that were short in the stocks will have to cover, and it will cause a chain reaction and increase in stock prices. However, brokerages started to halt the ability to buy stocks. You only had the ability to sell stocks. So the question now lies in, if it's a fair game, shouldn't you be able to halt buying and selling? But they only halted buying, which gave companies that were short the position a room of exit to get out their positions. And as of today, you can only limit buy. Now, this is where I say there's some type of hidden hand at work here. GameStop, this would have benefited those that bought thousands and hundreds and thousands of shares of GameStop at $4, $20, $30, because now the stock is at $300, $400, and the ones that got in early can benefit from this situation because they could sell covered calls. What do I mean by covered calls? They have the rights to these particular shares that they could sell at extremely high premiums. And the retail investor is buying this as much as they can, thinking the stock is going to keep going up. But now they can't squeeze the stock up anymore because there's limits to the amount of options you could buy. There's limits to the amount of shares you could buy, but there's infinite amount of shares you can sell. Which all this has been manipulated to what? To benefit the short position. Okay? Because I believe Robinhood Citadel acts as a market maker, which Citadel was one of the groups that shorted GameStop, but Citadel acts as a market maker. And what do I mean by market maker? I mean they have billions of dollars to keep these trades liquid. There's a reason you could buy and sell a stock and it doesn't jump from $1 to like 100. It's because you have market makers that's keeping this equity liquid for you to get in and out of trades. And this particular market maker, which controls the bulk of Robinhood's trades, were getting blown out. So it seems like, they took control of it. And only the ones that got in early were not affected because they don't have to worry about the stock falling because they're selling covered calls. And the same ones that are telling people to hold. Well, it's easy for you to say. You're not holding the bag. Okay? So most people might sell. Most people don't know what the hell they're doing. They just heard I could get rich off GameStop. Let me just dive in here and bought GameStop at $200, $300 a share. Jumped into AMC, jumped into Nokia, jumped into all these things. Now, immediately, I picked up something that this stock should have, on paper, mooned. All these stocks should have mooned. CTRM, Naked, you name it. All they even banned 50 of these stocks because what? Because silver is heavily shorted by JP Morgan. That was next on the list. Companies like SLV, heavily shorted by big banks like JP Morgan. So the stage was set to cause a huge wealth transfer. And all that was immediately halted. And the question now arises is, when the retail investor is getting burnt on a particular trade, where's the SEC to step in? Where's the regulators to step in? But when the hedge funds are getting burned, they're right there to step in. Now, with that said, the rules have changed. We have to invest differently, guys. If you've been watching all these videos, you would have done fine in the situation, because you'd have, even if you YOLO'd into these accounts before the rush up, you'd have said, wait a minute, how can this thing keep going up if you could only sell infinitely but buy limited? There's only one direction this thing could go, and that's in the favor of the short position. So the way you position yourself is you sell covered calls at very extremely high premiums, because John Templeton, Warren Buffett, Phil Town, they all say the same thing. Mohnish Pabrai, be fearful when others are greedy. So in the hype in this mania, I mean, when everybody on the street is talking about meme stocks, it's on the radio. That's when you should be fearful if you're in a meme stock, especially when you can't trade to its max potential. You sell your covered calls, you get your cash, and we just sit on the sidelines now because it could be very, very bloody. They're forcing a stock market crash. Uh, Unseasoned investors are going to be panicky. But if you've been watching these videos, if you're of the school of Monesh, if you're the school of John Templeton, you're seeing a great opportunity because you've kept cash. You didn't get caught up in the hype. And now, with the whole market tanking, because people pretty much got their pensions and everything, life savings, out of really stocks that are good with strong fundamentals to pretty much um, YOLO their entire life savings to these meme stocks, which are now limited in what direction they could go. So you should be having cash on hand, waiting for this crash, and what trouble is opportunity. So we should be looking forward when this market and crisis happens, when people are selling down for no rational reason. The business of a fundamental, the fundamental business haven't changed. You know, the price might have dropped 40 or 50% on a stock that value wise has not dropped a bit. So be level headed to those investors out there. Hope you have cash on hand because this crash is an opportunity. Maybe something even greater than March. Who knows? By the way, those same people that are selling covered calls, that are selling GameStop options at premiums of 15,000, while the unaware retail bro is buying this up, it doesn't matter to them. If the stock shoots up above their out of what they paid for it, they're fine, because they'll get out at extremely high prices. We spoke about this, selling covered calls and using dividends as ways to collect premium. So now it's time to really think like institutions. Now it's time to be looking at value plays, not getting caught up in the hype, and being level headed. And if you are in these meme stocks, and you have cash on hand, look, you can't lose money. You can only lose patience. Okay? So be level headed. If you have some cash on hand, just go shopping. Or even wait some more. By the way, I'm not a financial advisor. I'm just, just relaying information from some of the greats that we've learned from. Okay, so let's see where this market unfolds. Hope you guys are doing well in your investing. We're doing pretty well. And then be careful. Just be careful. Scrutinize everything you see. Scrutinize Wall Street bets. Scrutinize stuff you see on Reddit. Scrutinize this pumper, stock pumps, and every kind of pump you could see on StockWits or everything. Disregard all that stuff. Be level-headed and trade like an institution right now. They're looking at plays that most people will consider boring, but safe. All right, guys. I'll see you guys on the next one.